Hello students, glad to have you back. This is Dr. Mercado speaking, and we are continuing covering chapter 4, which deals with income tax withholding. Okay, this is accounting 1329, payroll and business tax accounting, and we are using the 2022 edition of the book. Okay, now in this particular lecture, I'm going to be going over problem 4.2, which deals with the percentage method. Now, the last problem that we covered, we did the wage bracket method, which was basically we just went to a table and we located the wage amount on that table and we were able to get the tax amount directly from the table. No calculations were made. Now, in this particular example that we have here, we're going to be using a different method, which is the percentage method. Now, for this particular kind of problems, we have to do some calculations, okay? Now, when we do the federal income tax withholding, the employer selects the withholding method that they're going to be using. Employers usually either select the percentage method or the wage bracket method. Okay? Both of the methods distinguish between married and unmarried individuals, and both methods provide the full benefit of the information on Form W-4. Okay, the choice between which method we use is based on the number of employees and the payroll accounting system used. The employer has the option to change from one method to another at any time, and different methods may be used for different groups of employees. Okay, and basically both methods take into account the standard deduction and amount of money used to reduce an individual's adjusted gross income in arriving at the taxable income amount. Okay, now when we are talking about the percentage method, the textbook outlines two steps. Okay, let me see. The two steps outlined in your textbook are step number 1, determining the amount of the gross wages earned, filing status, adjustment on Form W-4, and frequency of pay. Okay, and then step 2 is determine the withholding tax by referring to the appropriate percentage method withholding tables. Okay, now this is where we're going to be referring to some tables, and we're going to be doing some calculations. Now we're still going to use tables, but we're going to be doing calculations based on the information on the tables. Okay, so I went ahead and I brought over the tax table A. This is at the end of your textbook. There's an appendix with all of the different tax tables that are going to be used. So I brought over all of the percentage method tables for the weekly. Let me move this up. So we've got the weekly, the bi-weekly, we've got the semi-monthly. So there's a table for each reporting type of pay. If they're paid semi-monthly, weekly, monthly. So there's an associated table for each pay method, okay? Each frequency, depending on how you're getting paid, is a table that we're going to use. Okay, and I brought them all in because we're doing weekly, bi-weekly, semi-monthly, and monthly. So depending on the payment or the the frequency of the pay is a table that we're going to use. Okay, so we're going to be looking at the table, at the respective table, and then we're going to have to choose whether we are married filing jointly, single, or married filing separately, or head of household. So depending on what category we're in is the little area of information that we're going to be using. So it's very important that you pay attention. First of all, the frequency of the pay. How frequently are we getting paid? Because that will determine the table that we use. And then how are we filing? Married, single, or head of household. Okay? And then based on that information, we go into the tiers, we locate the tier that we're using, and then we're going to be doing some calculations based on that information. Okay, so let's look at James, and I'm going to be doing the calculations down here. That way you can see what I'm doing. Okay, so James, James has a filing status of married filing joint. Okay, married filing joint. So that means that James gets paid weekly. So we're going to be using this table right here. Okay, so he gets paid weekly. That's step number 1. Okay, we've identified the table weekly. Okay, married filing joint. Okay, so now we've located that we are married filing joint. So we're going to be using this area right here. Okay, and then number of withholding allowances not applicable. Before it was applicable, they've updated the tables and they've gotten rid of this particular item. Okay, and then the gross wage or salary. This employee gets paid $1,610 weekly. Okay, So we're going to look at the table, and the table says at least but less than. So these are the numbers that we're looking at, these two first columns, okay? And we're going to locate that 1610 in these first two columns, okay? So if we go through, we find the tier, which is the third tier, at least 865 but less than 2041, okay? So let me go ahead and mark that. This is the tier that we're using. Okay, so we're using that third tier. That is where that 1610 falls between. Okay, now that we have located that tier, we can begin our calculations. Okay, so the first thing that I'm going to do is I'm going to get my wage or my salary, okay, which is 1610, and I'm going to subtract that last number on the tier. It says the amount that the adjusted wage exceeds, okay, 865. We're going to deduct that. That is the amount that our wages exceed the taxable amount, 865. Okay, we're going to deduct that, and let's see what we get. So that is 1610 minus 865. That gives me 745. Okay. Once you get that dollar amount, you're going to multiply by the rate provided. So we're going to be working backwards. Okay. That rate provided, that is plus this percentage. It's 12%. We're going to pay taxes on the $745 at a 12% rate. Okay. And let's see what that gives us. So 745 times 12%, that gives me $89.40. Okay. Okay. And then I'm going to add that next number that's next to it. This is the tentative amount to be withheld, the $38.20. Okay. We're going to add that to our amount of taxes that we calculated, which is the percentage plus this percentage. Okay. So we're going to add the 89.40 plus the 38.20, and that will give me 127.60. And that is the amount that we are going to withhold. Okay, so let's run through this again. What do we do first, Dr. Mercado? Okay, first you pick up the amount of the wages, 1610. That is given to you in the problem. Second of all, you're going to subtract. You're going to go to the table, locate the line item that you're going to be working with based on the tier of the wages. Okay, I've located the line item, and you're going to be working from the right hand side to the left hand side. Okay, so you're going to be working backwards on the table. Okay, so you're going to pick up that last number, and you're going to subtract that from your wages. So it's 1610 minus the 865. That gave me $745. Okay, let me put this dollar sign here. Once you get that dollar amount, you're going to multiply it by the next item on the tier, which is the percentage. Okay, that 12%. So 745 times 12% gives me taxes of 89.40. Okay, I'm going to get that dollar amount, and then I'm going to add the next number on the table, which is a tentative amount to be withheld of 38.20. You add that to your tax amount of 89.40, and that will give me your total withholdings for federal income tax of 127.60. Okay, so that is the amount that we're going to withhold. Okay, so it's just a matter of going to the table, locating it, and then work backwards. Let's try it again for Lake. Okay, let's try Lake now. Okay, now Lake gets paid bi-weekly. Okay, so we're going to have to look at the bi-weekly table for Lake. Lake makes $825 bi-weekly. Okay, so, and how is Lake is single. Okay, so Lake is single and bi-weekly. Okay. Okay, so we're in the bi-weekly table. First thing we have to identify, we're in the correct table, bi-weekly. That's what it says here. And then this employee is single. So we're going to locate the single. We're going to be looking at middle tier. And then this employee is making $825 bi-weekly. Okay, $825. Okay, so insert, let me see. So we're looking at 825. So we're going to be using that second tier right here. Okay. So we're going to be using that second tier because the employee makes 825. So that's between 483 and 865. And we're under the single area, remember? This employee is single. So now we're going to focus our calculations on that particular tier. Okay. So let's look at Lake. Lake made $825. Okay. I'm going to subtract the amount on the last column, which is 483. So I'm going to subtract 483, and then that's going to give me 825 minus 483. That's going to give me 342. Okay. I'm going to multiply that by the rate provided, which is the next amount on the next column, going from right to left. That's a 10% percentage right there. So I'm going to multiply by the 10%, and I'm going to get the 342. Sorry about that. I'm going to get the 342 times 10%, and that's going to give me $34.20. And then I'm going to add that number on the next column. Now, if you see that next number is a 0, the tentative amount to be withheld is 0, so we're basically not adding anything. So that means that my tax amount will be, for federal income tax purposes, $34.20. Okay. So for Lake, my withholding amount is $34.20. Okay. So it's just following the same step, and remember to work from right to left. You subtract the first number, you multiply by the second number, and then you add the third number. Okay, that's the order that we're going to be doing our calculations. Okay. So let's look at walls. Okay, walls get paid semi-monthly. So now we have to look at a separate table, semi-monthly table. Okay. And this is where you remember you have to locate the correct table. A lot of students use the incorrect table. That's why their numbers are off. Okay. So semi-monthly. And now let's look. Walls is married filing joint. Okay. So we're going to do married filing joint. And then Walls gets paid $925. Okay. $925. So then Walls is in the first tier. Okay, so in this particular case, we are in the first tier. Okay. So, let's look at Walls. So Walls gets paid $925. Okay. I'm going to subtract that first line item. Okay. So in this particular case, the amount of the percentage of the amount that exceeded the wage exceeds 0. So in this particular case, okay, let me see, how much did they make? Yeah, $925. Okay, so they made $925 right here, $925. Okay, so this particular employee it's in the first tier, so they don't have a tax liability. You see, they're all zeros. They don't have a tax liability. They made too little to be taxed. Okay, so they're in the 0% tax bracket based on this particular semi-monthly pay period married filing jointly table. So in this particular case, the employee made an amount that is not taxable. So 0 taxes would be withheld. So in this case, because it's a 0, 0, 0, we are not going to withhold any taxes. So Walls, the amount for Walls that is taxable will be 0. Okay, and it's going to be 0 because if we look at a table for Walls, and we're looking at the semi-monthly table, okay, semi-monthly, Walls fell under the first tier because Walls made $925. So because he made $925, he is not responsible for any taxes, okay? No, it's not taxable. His earnings at that point, he did not make enough money to be taxed on his earnings based on being married filing jointly. Okay, so he made below the threshold, so no taxes will be deducted for that specific employee. Okay, so we didn't have to do any calculations because no taxes will be charged based on that specific tier. Okay, so walls, no federal income tax. Okay. Okay. And then we have free. Okay. Free gets paid monthly. So we're going to have to look at the monthly table, and free is married filing jointly. So we're going to go to the table. Let me move this table up a little bit. That way we can see it better. Okay. Right here. So now free is married filing jointly and monthly. Okay. So look at the table. We're looking at the monthly table. Make sure that's the first thing you should look at. And then married filing jointly. Okay. Married filing jointly. Okay. And then free made $28.75. Okay. So we're going to locate the table. $28.75, and that would be the second tier. We were looking at the second tier right there. Okay. So the amount is $2,875. That falls in that second tier. So now we can do our calculations for free. So free earned $2,875 this pay period. We're going to subtract that last number, which is $2,092. Okay, that is the amount that exceeds the taxable amount of your earnings. So basically, that's telling you, okay, this is the amount you don't have to pay taxes on. You don't have to pay taxes on $2,092. So we deduct that amount from your wages. $28.75 minus $20.92. That gives me your taxable amount of $783. That is what you're going to pay taxes on. Okay? You're going to pay taxes on $783. You're then going to multiply it by the rate. In this particular rate tier, the rate is 10%. Excuse me. So it's 783 times 10%. Okay? And that will be $78.30. Okay? And then you're going to add that third amount. Okay? In this particular case, that tentative amount is 0. Okay? So the amount of taxes to be withheld is $78.30. Okay? So we work backwards. The wages, $28.75 minus that last number on that tier. And remember, that number represents the amount that we are adjusting our wages by based on the amount that exceeds the taxable amount based on our tax bracket. Okay? So that's $2,092. That means that we're going to pay taxes on $783. Based on our tier, we're going to pay taxes of 10%. Okay, that gives me $78.30. Do we have to pay any additional taxes? The tentative amount to be withheld? No, we don't. That's a 0. So that's going to give me $78.30. So just follow the order. Subtract that first number, multiply that second number, and then add that third number. Okay, so that amount is $78.30. Okay, so that is how we use, or that is how we do, okay, the percentage method. Make sure you locate the proper table, okay, the proper filing status, and then you just follow the examples. You work from right to left. You subtract, multiply, and add. Okay, so I hope this will help you complete your homework problem. Please read over the textbook, the section over the percentage method, as well as review the examples provided. Okay, that is it for today. Have a great day.